Well, the short-term interest rate will not change despite the very public push from President Trump to slash it. Federal Reserve Chairman Jerome Powell saying just moments ago that there are many uncertainties left to resolve, and probably the top of that list is President Trump's sweeping tariffs. Scripps News business and tech correspondent Maura Barrett is live for us in Chicago. She's been tracking all of this. Maura, the decision, not itself a surprise, but what were some of the insights that Chairman Powell gave about why rates are holding steady for now?
Well, when the Federal Reserve is making its decision about interest rate cuts, they're looking at unemployment numbers, which is low right now. They're also looking at inflation. And their big goal in terms of what the Federal Reserve said in their post-decision statement is that they're committed to getting inflation down to about 2%. And that's a big factor in addition to the looming tariffs and seeing how the impact plays out for consumers. That's why Chair Powell said that he wants to hold rates right now, and that's what the board had voted on in what he called modestly restrictive. And so I spoke with Leanna Hawkins. She is the founder and president of Blackhawk Financial, and she broke down why inflation plays such a key role in this decision.
The Fed's decision today, it reflects progress, not a victory on inflation mostly. This is mostly conversations around inflation. We know that the economy is in a pretty strong place. Unemployment is in a strong place. We've seen inflation go down from 9.1%, which was at its peak post-COVID.
And so the Commerce Department released its economic report today and flagged that inflation sits now at around 2.1%. Core inflation is closer to 2.5%. But all that goes to say is that the numbers are falling closer to that 2% goal. And so Chair Powell was asked about what that could mean for September's meeting, if there could be any indications because of that inflation dropping for interest rates to change for the next Fed meeting. And Powell said that basically they want to make sure that they're assessing the risk in the right way, that those inflation numbers could change. And so that's something they'll continue to monitor over the next couple of months. He also noted that they'll get a few more jobs reports along with those inflation numbers as well to consider ahead of the September meeting. Now, the other thing that stood out about this decision today is how the members of the Federal Reserve Board voted. Two of the governors voted against keeping rates steady. They wanted to have the board ease up on interest rates because they wanted to acknowledge that the unemployment and employment are looking pretty strong. And so Chair Powell said in the press conference following the decision that they made their points clear and they concisely explained where they stood. And the other 9 members that voted today disagreed. And so that's something that's significant because this is the first time since 1993 that multiple members of the board voted against what was ultimately decided. This is usually a situation where they are in lockstep. And so, as I noted, the next time we will see them meet and come to a decision on the interest rate will be come mid-September, Andrew.
And Maura, I'm sure folks watching are anxious to know what the impact could be for them, for folks with credit card debt or looking to buy a home. What sort of impact could today's decision have?
The way economists put it is that right now is a better time to be a saver than a borrower. And so if you have a high yield savings account, this is actually a rare time where those high yield rates are higher than the interest rate. And so that's a plus. And economists also flag if you have credit card debt or any of those variable loans to try to pay them down as much as you can. If you're looking to buy a house, it might be worth waiting and seeing if you can wait it out, negotiate a better price. But either way, if you're in a pinch, you'll want to try to refinance that mortgage rate once interest rates are lowered, depending on when that is, Andrew.
All right, Scripps News business and tech correspondent Maura Barrett for us. Maura, thank you.